The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, what's Bitcoin up to? The CoinDesk Bitcoin price XVX index currently trading at $56,668. Bitcoin slightly down almost 3% over the past 24 hours. The CoinDesk Ether price ETX index at 4,544. ETH sliding down almost 3.7%. And the DFX CoinDesk DeFi index is also taking a step back, retreating about 2.5% for the day. Joining us now to discuss the crypto markets is Matt Hougan, Chief Investment Officer at crypto asset manager Bitwise. Hello there, Matt. Always a pleasure to have you. So give us your crypto markets outlook. Why are we seeing this retreat and how long will it last?
I love the description of this as the Seinfeld market with nothing going on. The caveat I would add to that is I think all of the news that matters right now in crypto is long-term news. I can speak from my perspective at Bitwise, and I'm sure this is true at other asset managers. The pace and intensity of due diligence meetings with leading institutional investors has never been higher right now. You're not seeing that institutional interest reflected yet in the market and the prices because that work takes place over months and even years. But I can say the intensity of institutional interest in Bitcoin, in Ethereum, in Solana, and other top assets is higher than I've ever seen it. And so that makes me bullish for the long term, even if during this sort of Seinfeld moment, you get these sideways or slightly down movements like we're seeing in the market today.
So, Matt, we did see this is the first month when we have a Bitcoin ETF that's based on the futures. And this is the first month that we're seeing its effects on the market. How much of an effect are they really having? Is it changing any part of the market dynamics? We saw just when the roll day came, when the expiration day came, there was a slight sell-off. So what happens? Is that really a factor, or was that just coincidental? I mean, are futures really playing in this month more than they ever have before?
I don't think they're playing in much more than they have before. The growth in the futures market has been a story that's been taking place over years. The ETF was a short-term peak in that. We saw $1 billion enter. That certainly has an impact on the market, but we're not seeing continual inflows to make that ETF or broader Bitcoin futures ETFs really systematically important. If that had continued to grow to be a $2 billion, a $5 billion, a $10 billion product, it may have started to impact the futures market more. But at $1 billion or so, I don't think it's having a huge impact. What it's doing once again is bringing more investors to look broadly at the asset class. I think a lot of investors have realized that a futures-based exposure is not the right exposure for long-term investors. And so they're pivoting to look at other ways of getting access. But the fact that an ETF exists has helped bring more institutions to the table. So no on the short-term impact of the futures market, but yes on the long-term trends of institutional investors moving in.
Good morning, Matt. One of the things we've been hearing a lot over the past week or so is this idea that, the demise of Bitcoin is a safe haven, right? Because we're seeing it crash with equities markets. We're seeing, people are really watching how Bitcoin is going to respond to fears over this new variant. What do you think about that? Is Bitcoin still viable as a safe haven?
Oh, I love this. I find this so funny. Traditional Wall Street spends 350 days a year telling us that Bitcoin is too risky to invest in. And then when we get a risk off moment in the market and Bitcoin sells off temporarily, they throw up their hands and say, oh, it doesn't work. It's either a risk asset or it's not. You can't be on both sides of the spectrum. We've seen this play out in the market for multiple years, and the story is always the same. Over acute, very short-term periods when there's a sharp risk-off sell-off in the broader market, yes, Bitcoin pulls back. But over long periods of time, it is the most effective hedge against long-term inflation and inflationary risks. It's a key part of sort of the risk-off element of your portfolio. Look, Bitcoin is down recently. It's up 90+% year to date. It's up 200% over the past 12 months. It's up 7,000% over the past 5 years. Does it sell off during short risk-off markets? Absolutely, because it's a new disruptive technology and the whole market adjusts very rapidly. But pan out, we're investing in this for weeks, months, years, some people decades. That story still shows that it's a great place to hedge your portfolio against the largest risk that exists in the market right now, which is the risk of inflation in the US economy and other developed economies.
We see a lot of investors wanting to invest in Bitcoin. Fidelity just announced that they are launching a spot Bitcoin ETF in Canada, circumventing the United States. They're a $4 trillion asset manager. What was your reaction when you heard this news?
Well, that speaks to what I was talking about earlier, which is we had this spark of institutional interest in the crypto market that started a few years ago, really gained traction in 2010 and continues to accelerate. And the timelines that these institutional players play on take a long time. So Fidelity is now launching in Canada. We're still waiting for a spot Bitcoin ETF here in the US, but it's all inevitable. I see it as one more signal of the biggest story in crypto, which is this move of institutions and institutional investors into the space, which we talked about for a long time and just plays out on almost a geologic time frame. It plays out on a much longer time frame than crypto is used to, but the impact is significant. It's another signal also that we're going to get a spot Bitcoin ETF in the US eventually. It's not going to be 5 years from now. I think it's sooner than many people think. This is just another signal that we're moving in that direction.
So Matt, when you look at the DeFi market, we've had a small uptick over the past few days, but nonetheless, when you expand it out to a few weeks, it just seems relatively flat. What's going on? Why haven't we seen why didn't we see the kind of growth that we saw earlier in the year where DeFi just seemed to have exploded? Have we plateaued? And also, is that a stuffy behind you, or is that an actual puppy?
It's the cutest Doge in the world.
That is my own Doge. Yeah, it's 6 a.m, so that's Wrigley, my yellow lab. He's a sweet boy. Great question. I was looking at DeFi this morning. There's sort of a disconnect between the prices we're seeing for tokens like Uniswap and the activity we're seeing on those networks. I see continued sort of fundamental progress, particularly in DEXs, as that market continues to mature and grow in size, and still strength in areas like Maker and decent activity on Aave and others that just hasn't been reflected in the prices since earlier this year. I don't think we're necessarily at the end of that, but I see continued development activity, fundamental activity moving forward on the DeFi space. I suspect we'll have another sort of version of the DeFi summer at some point in the future. Is it January? Is it July of next year? Is it December of next year? I'm not sure. But the fundamental activity in the DeFi space hasn't slowed down. It's continued to grow. The VC funding into that space hasn't slowed down. It's continued to grow. It's just that token prices have been trading, slightly down for a meaningful period of time. Eventually, that will be an opportunity. I'm not sure what the catalyst will be. But as those prices go down, but the fundamental activity goes up, it starts to get more and more interesting. And eventually, those two things will lead to a different outcome.